Welcome back to Tax Talk with Hey Hey, where we offer simplified tax planning and mentorship to help 6 and 7-figure CEOs ditch the daily hustle by achieving financial independence from your business by increasing your purchasing power and diversifying your source of passive income. Through financial mentorship, realistic goal setting, and simplified tax planning, without having to hustle for the rest of your life, with the guarantee of the optimal roadmap to move you towards your desired time freedom. Hi, welcome back to another episode of Tax Talk with Hey Hey. I am your host, Suhey Piedra, an enrolled agent, and our company is Prominence Business located in Glendora, California. So as you guys know, the last few podcasts I've had guests have been fun and more about entrepreneurship and mindsets, what the struggles are that all entrepreneurs sometimes face, or we're at different stages. And I wanted to bring these individuals to share their journey and a little bit about them on a personal level. This is a tax talk podcast, and so I'm going to have to bring it back to taxes. That's what I do. That's my passion. I love working with taxes and helping individuals navigate one of the most difficult parts of their business. When you talk to entrepreneurs, they will typically say they hate doing their taxes. They don't know about taxes. They hate the liability. They hate what taxes represents. And I'm here to try to shift that a little bit. Taxes are not necessarily bad. What we don't like most of the time is the fact that it's just organization. We're good at maybe sales, or we're good at developing a widget, or we're good at the service that we provide. But taxes necessarily is not what we love to do. And taxes requires that we have things organized, that we take care of our bookkeeping, that we have things like payroll going on, that we have our numbers in order so that we could turn around and do a report that is extremely complicated, more than it really needs to be, so that we report to the government how much we brought in, where did it all go, and at the end, our net profit, we have to split it with Uncle Sam. Well, the majority of the times, clients find that very difficult. I'm here to always explain to clients IRS is not bad. It's just what happens is we delay the process. We're not organized. We make it really a mess sometimes, and that's when it becomes trouble. Well, reason I'm talking about all of this is because one of the things that has been brought to light, and a lot of media, TikTok, social media have been bringing it, is talking about reasonable compensation. Now, this is not a Bible. This is something called a master tax guide, okay? It should be. And I always tell clients, let me pull out my Bible so I can research some things, right? But it's a tax guide. And today I bring it out because I want to talk about reasonable compensation. Many individuals out there was a hype about incorporating yourself. There's, you need a corporation when you start a business. You necessarily don't need to set up an entity to start a business. You can start a business as a sole proprietor and create a DBA, which is doing business as, and report it on what's called a Schedule C. All that is on the personal return. Well, there was talks about, well, that creates audit risk and all this other stuff. You're exposed to liability on the legal side. Therefore, you should open up an LLC or an S or a corporation of some sort. So many out there with LegalZoom and how easy it is to use LegalZoom went out and created their entities. Well, what happened with that is a lot of the times these entities were selected to be taxed as an S Corp because that's what everyone is talking about. Well, we have to identify if that is right for you, first of all. But if you are walking around with an S Corp and you set it up yourself, or even if you had an attorney set it up, it doesn't really matter. The point is you're walking around and you're doing business as an S corporation. The IRS is really drilling down on the S corporations for reasonable compensation. For many years, the S Corp has been abused when it comes to reasonable compensation. And let me tell you a little bit about why that is, why most people don't set up the reasonable compensation, which is paying yourself through a W-2, paying the Social Security, the Medicare taxes. Well, first of all, it's a little confusing, right? You set up an entity and nobody really brings up the fact that you need to set up now this other W-2 or this reasonable compensation. So for many years, individuals walked around with an S Corp loving it because of the tax savings. Well, I'm sure that adds to the reason why our Social Security is running out of money. And that's because when you set up an S corporation, when you don't set up reasonable compensation along with it, what ends up happening is the corporation doesn't pay for Social Security or Medicare. We are obligated to pay a portion of Social Security and Medicare through our reasonable compensation. But since no one was really doing that, the IRS is starting to crack down on that. So what they want us to do is to set up a reasonable compensation. But now the question is, what is reasonable compensation? What does that mean? And if I read to you what my little master guide says about reasonable compensation, it still doesn't make sense. And that's because it's unclear. Reasonable means what is reasonable to you may not mean reasonable to me. What is reasonable for one business may not be reasonable for the other. So what we have done is we have partnered up with a company where we run reports for reasonable compensation. So let me break down that report for you just a little bit because it's going to help you understand how reasonable compensation is calculated. How this company does it is we want to know what is it that you specifically do throughout the day when you're in your business, when you're working. So if I were to describe my business, what is it that I do? I answer phones. I do marketing flyers. I post on social media. I meet with clients. I prepare taxes. I network. There's so many hats that I wear. Sometimes you'll see me cleaning this place, right? So I'm the custodian here, the janitor. It doesn't matter. The point is that you wear multiple hats throughout your day in your business. We need to account for what those hours are. So what I like about this report is that we get to go in there and we select how many hours we work as maybe the receptionist. How many hours do we work as a marketing team? How many hours do we really focus on what brings in the money? For me, it would be my consultations, my tax preparation. How many hours of my day do I really spend on that? Sometimes I feel like I don't even have time to get to that because I'm so busy doing other little things that maybe are time consuming. Sometimes I think I love when I post something on social media, but instead of it taking me 10 minutes, it took me an hour to create a meme or to create some sort of a post on social media. So those are the things you want to account for. And let me tell you why. Because those rates per hour are different. What I make as a tax strategist is not the hourly rate that I would pay someone to help me answer phones. I would not pay the same rate for my tax strategist, tax preparer, that I would pay for somebody that's posting on social media for me. The rates are totally different. And that's what you need to understand is make a list of all of the job duties you do, and then put a little bit of a rate to each of those hours. When I'm cleaning the office, I am not getting paid what I would pay the marketing team. So there's a difference in rate. And now this software will help us categorize all of those hours with all of those different rates based on industry, right? Because they're all in different industries. Another factor that comes into play is the cost of living, where you're located. All of that stuff has impact on what this rate is. Because think about it. We sometimes hire people that are in different states, or we run across businesses that are in different places, and their rate per hour is different than our rate per hour here in California. So that all plays a part, okay? What is that rate for the individual within your area? Big difference, right? So we want to keep that in mind when we do this report. So we got to give it your location. What about experience? What about your education? Imagine if I hire someone that just started in the tax business and they're helping me data enter. Well, their rate is definitely not going to be the rate of a tax strategist that I hired that has 20 or 30 years under their belt in experience. That rate is different. That's all coming into this calculation so that we know that these hours are billed at a higher rate, and versus the hours of the newbie, our rate it's a lower rate. So all of that comes into play when we're using the reasonable compensation report or study. Okay, we want to take the industry standards. We want to take the location, your cost of living. We want to take your education and experience into the equation. And we want to make sure that we put as much detail as we can into this report so that it comes up with a reasonable compensation for you, for your business, for your industry, for your location, for the level of experience. All of that will come into play, and it gives us a number. Whatever that number is, okay, whatever that number is, let's say it's 70,000 for the year. That is what it's going to cost for you to replace somebody that does what you do, in a sense, right? If it wasn't an owner, or if it wasn't somebody related to you, or that had any type of relation to you, somebody basically off the street that you would hire to come in and replace you. Let's say that you were to pay them $70,000 a year. That's the reasonable compensation. That is what you set up on a W-2, and that's where you would have to be as a company owner. You would have to match their Social Security. You would have to match their Medicare. That's the tax that you now are responsible to paying on that portion of your income, the $70,000. So it sounds like a lot, but if you really slow down and put everything into perspective, once you come up with that number, maybe you don't have to revisit that number again until next year, right? It's like getting a raise at your job. You want to evaluate what that reasonable compensation that you're paying yourself on the minimum on annual basis. It's important that you look at it that way. Now, when you set up your W-2, the tax return will reflect that you had an officer compensation through a W-2. Well, that's what the IRS is looking for. That's what they're making sure that you are being compliant with. So I'll get tax returns in here sometimes that have an S corporation and they paid $0 through a W-2. I'm obligated to tell you that's not correct. You need to set up wages for yourself. You need to pay some of that Social Security and that Medicare. And that's what the IRS is threatening that they're going to start to really, come down on us about. They're going to maybe audit the file. I'm not sure how they're going to come after that, but we still don't know. But we just have heard that that's what they're going to be looking at. So if you're out there and you need a reasonable compensation report, please know you can reach out to us. If you're going to be doing it yourself, document. Nobody says you have to use this report. What they're saying is document how you came up with that salary and document what's the reason behind it. You can easily say, well, my company didn't make $70,000 a year, so how the heck am I supposed to pay myself a reasonable compensation of $20,000? Well, the IRS has an answer for that. They want you to pay yourself through W-2 any type of income that you take out through the corporation as W-2 jobs, as a salary, as a reasonable compensation to yourself. Because you didn't meet that $70,000, any dollars that you take out from the corporation into your personal account need to be part of that equation. So, again, it may sound a little complicated, it may sound a little overwhelming, but if you really just document how you came up with that salary, do things like this reasonable compensation where you take things into consideration like your location, experience, education, and come up with a reasonable salary for yourself, you have done what the IRS is requiring, that you pay yourself a reasonable salary and you pay the Social Security and the Medicare and all of that good stuff, and that you document or that you do such a report like this where there's reason behind it that backs up where that number came from. If you find yourself still confused or you need more assistance with this, please feel free to reach out and call our office where we can help you with a report like the reasonable compensation report that we offer. If you have found this episode to be informational, please like and share it. There's so many people out there with so many questions about reasonable compensation. Please share it with other entrepreneurs or other individuals that are struggling to try to figure out their reasonable compensation. Please remember to follow us on all our social medias. Our Instagram is prominence.services, and our website is prominencebusiness.com. We'll see you on the next one. So if your mindset is ready to excel to the next level, and you want to give up the multiple hats to a business who will support you, then schedule a call with us today. We can be reached at 626-825-8249. Please give us a review and share us with your friends and family.